Welcome back everybody to Moneycontrol live stream. You're watching the closing bell and I'm Santosh Nair. Well, bulls are clearly on the back foot at this point in time, but it's been a good fight back. The Nifty opened around 80 points lower this morning and then fell all the way to around more than 150 points. But since then, the bulls have managed to claw back some ground, though it still looks like benchmark indices will most likely be ending the day in the red today. The volatility index has risen slightly. It's gone up by about 2.58%. Now, what the rise in the volatility index or the India VIX means is that outlook on the market near term has turned a little bit cautious. Now, remember, as long as the VIX is between 12 and 20, what market players say is that typically this still means a positive outlook on the market, or at least nothing majorly negative. It's only when the VIX starts rising above 20 is when there is cause for concern. And among the sectors which have taken a beating today, largely stocks from the auto banking sectors have taken a fair bit of knock, especially PSU banks. Now, remember, PSU banks were also the best performers in the last 3 or 4 weeks, more than the last couple of months, and now they're seeing some bit of profit taking. Investors are trying to take some money off the table given the kind of returns that they have made. At the same time, we are seeing a rebound in shares of IT companies. Now, IT stocks had taken a beating yesterday. That was after Accenture's quarterly numbers fell short of market expectations, or rather the reading into the numbers were that probably there are signs of demand slowdown in the US, which then could hurt Indian IT services companies as well. Now, Indian IT services companies took a beating yesterday. However, in today's trade, they are among the few stocks which have managed to hold ground. And among Nifty stocks at this point in time, the stocks which are still in the positive territory, they include Adani Enterprises, which is up by a little over 2%. TCS is up by close to 1%. Infosys, Reliance and IndusInd Bank are the other gainers at this point in time. Also, let's have a quick look at some of the FNOQs. We are seeing unwinding of long positions in futures of Britannia, PFC and Punjab National Bank. Punjab National Bank was also among the best performers in the PSU banking space over the last month. We are seeing short build-up in futures of City Union Bank and also Godrej Properties, and we are seeing long build-up in Adani Enterprises, Intellect Design Arena and Indigo. Indigo today had announced 21 additional flights for its winter season of 2022-2023. The market appears to have taken that announcement positively. And now let's take a quick look at some of the stocks that have caught our attention, beginning with Indian Hotels. Now, this is a stock where Motilal Oswal has taken a positive view. It is a buy rating and a target price of 390 rupees. Now, overall hotel stocks have had a good run over the past few months, mainly because of resumption in both business travel as well as the holiday travel. Now, Indian Hotel has been among one of the star performers. Clearly, its strong balance sheet and the fact that it's the market leader in the segment has endeared it to investors. The stock did see some bit of profit taking, but once again it seems to be consolidating after a sharp, after a steep decline from its highs. Now, according to Motilal Oswal, the strong demand momentum which was seen in FY22 is likely to continue in FY23 as well. And also, mainly the key triggers for growth in earnings will be improving average room rates, which have been steadily on the rise over the last many months now. Besides that, the demand is also likely to remain strong because of demand supply mismatch at this point in time. Demand far outstrips supply at this point in time, and before new supply starts coming on tap, it could be good times for hotel companies for at least a few more quarters. Now, according to Motilal Oswal, also the margin in the new businesses which the company is looking to scale up, they will be both the new businesses which the company is scaling up is both margin as well as ROCE, which is return on capital employed accretive. And some of the new businesses which Indian Hotels is undertaking at this point is Ama Stays, Qmin, Chambers and also the management contracts. Now, according to Motilal Oswal, the new businesses are set to clock a 50% CAGR over the next 3 years. That's also partly because these businesses have a pretty low base at this point in time. Phoenix Mills is the next stock on our watch list. Now, Kotak Securities has a add rating on the stock. The company recently announced that it had acquired 7.2 acres in Surat, and it plans to make a 1.1 million square feet mall there. And according to Kotak Institutional Equities, the company already has 4 under construction mall properties at this point in time, and addition of the one in Surat, which is expected to be commissioned by 2027, also improves earning visibility. And according to Kotak Institutional Equities, the valuations are pretty reasonable at this point in time, at about 15 times 1 year forward EBITDA. That's because Phoenix EBITDA is set to compound at 45% over the next 3 years. Marico is the third stock on our watch list this afternoon. The key thing working in favor of the company at this point is that copra prices have been coming off. Dolat Capital is among the brokerages which is positive on the stock, and it has recommended an accumulate rating on Marico. Now, according to Dolat, Marico was among the handful of companies, FMCG companies, which in fact saw an uptick in its gross margin during the quarter gone by, while most other companies actually saw a decline. Now, one of the reasons Marico was able to report an uptick in gross operating margins is that raw material prices have cooled off to some extent. Besides that, the company has also been able to take calibrated price hikes, and the brokerage sees revenues growing at 9.1% compounded over the next couple of years, and it also expects the company to report margins of about 19% in FY24 and 19.2% in FY25. Bharat Dynamix is the last stock on our watch list. Now, Elara Capital is bullish on the company. Elara Capital has trimmed its earnings estimates for the stock slightly. However, it's pointed out to the fact that the order book position of Bharat Dynamix remains quite strong at this point in time. It's about 11,900 crore as on November end. This is up 17% compared to what it was at the end of March 2022. Now, the company has said that it expects about 6,000 to 8,000 crore of order inflow for the Akash surface to air missile, and this is expected to come in the fourth quarter. And according to Elara, the order book of Bharat Dynamix is set to rise to about 20,000 crore by March 2023 and about 25,000 crore by March 2024. So, these are some of the factors in favor of Bharat Dynamix, although defense stocks in general have been seeing some bit of profit taking over the last few days. They have also been among the best performers in this market, so some bit of profit taking is only to be expected. And before we wind up, let's take a quick check on the market. The Sensex has further managed to trim its losses. It's down by just about 85 points now. That's a fairly good comeback given that the index was down by almost 600 points at one point in time. The Nifty is also inching closer towards the 18,400 mark. In fact, it's now down only 27 points from from the previous close. This index again was down by over 160 points at one stage. So, it looks like a lot of investors are still going in for the tried buy on dip strategy, which appears to be working for now. But a word of caution here though, overall global cues are slightly mixed at this point in time. US equity futures were down sharply earlier in the day, while they managed to recoup most of the losses and are now trading flat. The overall mood clearly has changed a bit ever since last week. The Fed reiterated that it will keep interest rates higher for longer than what the market is expecting at this point in time. Well, with that, it's a wrap on this edition of Closing Bell. Thank you for watching, and please do send in your feedback. We'll be happy to hear from you.